today's video, I'm going to show you guys a very important lesson that you've never seen on the market. Today, I'm going to break down how you can read proper market structure as a beginner trader, or even if you are an intermediate trader. Because one of the major issues that traders face is how to understand market structure. For those of you that don't know me, my name is Divine, and I've been trading the Forex market for over 3 years. I have 3 years experience in the market, and I'm still growing and learning new things because the market, we are always students of the market. We are never masters of the market. So I'm going to switch over to my laptop now, and I'm going to break this down for you in its simple terms. So let's switch over to my computer right now. So in today's video, I'm going to break down how you can easily understand market structure. Now, this is Jump 100. Jump 100 is traded on the synthetic indices market. And I'm going to break down how you can easily understand market structure on this chart. Now, it can also apply this to Forex or cryptocurrency market, any market at all. But I'm going to use this as a lesson for today. Now, if you look at this market here, this is the daily time frame. As you can see, this is the 24-hour time frame, which is the daily time frame and our higher time frame. So when you are analyzing, you use a higher time frame from daily down to the least time frame. Now, when you look at the market structure here now, if I ask you now, what is the market structure of this market here, of this particular market here? So as you can see here, the market has been forming repeated lower highs, lower lows, as you can see here, repeated lower highs, lower lows, and is still trending downward here. So that's what we are seeing on this market here. So now, if we want to analyze this market, like we said in technical analysis, we use historical price data to predict the future or what will happen in the future. Now, if you look here, from here, we can see here that we saw a shift in market structure here. We saw there's a shift in market structure here, signaling that this market is bearish now. That means it's going down here. Now, as I showed you earlier, you can see a series of lower highs and lower lows, lower highs, lower lows, and so forth. Now, if you want to break down this chart here, now to break it, okay, how do we read this market structure here properly? To understand this market structure here properly, and what are we going to do? Now, the way I'm going to break this down in simple terms is like this. Now, as you can see here, like I said, this is the shift in structure. This has shifted from bullish, as we are seeing here, to bearish, which is the current price trend right now. So as you can see, the market has shifted from bullish to bearish. So we should be selling this market now. We should not be buying this market at this particular time. So now this is the daily time frame. Now from the daily time frame, we have seen that this market is bearish. So we can see here we have seen a break of structure here, a break of structure here, and another break of structure here, another break of structure on this time frame here. So now we're going to go down to the 4 hour. So we are going to go down to the 4 hour. Now, one thing you must know is we have a external structure and internal structure. Now, this is the daily time frame. This is an external structure. Now, if we go down to the lower time frames, we are going to see internal structures that are inside this main structure here. So if we go down to the 4 hour time frame, now I'm going to break down this internal structure we are talking about here. Now, if you look here, we can see this is a lower. Let's go back to the upside here. We can see this here. We saw this high here formed. Then we saw this push downward. This is a lower high here. This point here is a lower high. This point here is a lower high. So after that, after price moved up, it came down here and it took out this structure here. These are internal structures here. So as price came down, it took it down. Then we saw this sudden push downward here. We saw this sudden push downward like this, signaling we should be selling this market, not buying this market at the moment here. Then after we saw this huge drop here, price pulled back up here again. Price put back up here. We saw this. This is an internal retracement. This is not the normal trend of the market. This is simply a retracement. So this higher highs, higher lows, and we saw higher high again. Now, most people think, oh, this market is bullish, we should keep buying, but they are not seeing the main structure from the higher time frame. So price is forming a series of higher highs and higher lows on the lower time frame, and this is what fuels many traders is that they trade from the lower time frame rather than seeing the market from the higher time frame perspective, which will not help them to decide or understand the current market they should be following or trading at that particular time. Now, if you've seen this from here, if you've seen this from here, we've seen that it's from the series of higher highs and higher lows. Then we saw this sudden push here, signaling there's a shift in the market structure from here. There's a shift in the market structure from this particular point here. Now, once you see this shift here, it has taken out, remember, was our internal retracement, higher highs, higher lows, higher highs. Now we saw this price has closed below this, our higher low here, signaling that sellers have now arrived into the market, which has confirmed our directional bias that sellers are now in charge of the market. Now, some people will be saying, okay, we saw this as an inducement. We should wait for this other block here to buy this market up. This is where you make a terrible mistake, and this is what leads to certain losses in the market due to not having this basic and essential knowledge of the market. Now you say, okay, let's wait for price to come here so we can buy. You wait for price to retrace here to buy. Now if you look, price really came here. It pushed up, but it was not able to take out this high, which would have confirmed that we are on a bullish structure. So it just put back up, tapped on this other block here, this supply zone here. Then what happened? It dropped with huge force. So if you were still holding this rate, maybe expecting it to come down, you would have hit your stop loss. It would have hit your stop loss here. So now this retracement, we got our confirmation of the main trend from the higher time frame through these internal structures here by seeing this shift in market structure here. So the next thing you should be doing here is to wait for the next shift in structure here. This is the next shift in structure, confirming that we are currently on a bearish market, that we should be selling this market at the moment. Now, you can use supply zones here. As you can see, price came back up. It tapped on this supply zone here. This support turned resistance here. You see, it came down, took out this inducement here, then it tapped on this resistance, on this support turned resistance, and it sold down, confirming that we are currently selling the market. We should not be buying this particular market. Now, if you look, we saw another shift in structure again, confirming we should be selling this market. Now, one thing that makes most traders lose is by misunderstanding internal market structure for the external market structure, because it's the external market structure or the main structure on the higher time frame that determines the internal structure of the market. So you should get your bias from the higher time frame, then to help you to decide how to trade very well on the lower time frame. So we've seen another shift in structure now. Now the question is, where should we be expecting the market should go to again? Now we've seen that this is a breakout structure. Now I'm going to there's a concept I will have shown you guys here, which is order block, or how to use order block. But we are talking about market structure on this particular video. Maybe my subsequent video, I'm going to break down how you can understand order blocks or other systems I use for trading the market. But today I was talking just about market structure, so I'm not going to go too far for today. So we've seen that this is a lower low. This is a shift in structure here. Then we saw another shift in market structure here again. Another shift in market structure here again. So showing us that this market is bearish at the moment. You should not be selling. You should not be buying rather this market. You should be selling it at the moment. Now, this is how you read market structure. Remember, like I said, you go to your higher time frame, like the 24 hours time frame, which is the daily or the weekly time frame, and you mark out goods. You mark out or analyze the market by getting the determined structure there. Then it will not help you to trade very well and understand the market structure on the lower time frame. This is how you trade efficiently and profitable as a trader. So now, as this is the current price of the market as it is now. So what you should be expecting is that, okay, we should get for now, what we should be expecting is to get a retracement back up to maybe a supply zone, maybe here or here, anyone. Then you expect another push downward. So you should not be expecting bullish structure for now. So the only time we can be able to see bullish structure probably on this market, for me, based on the system I use, is when we probably take out this high, maybe. When we take out this high, that's what I'm saying. But when we take out this high, maybe price comes back up like this, forms higher highs like this. Then it pushes back up and takes this high. Then we can now maybe wait for a use any whatever system we use here as a confirmation to continue the bullish move upward. So this is how you trade the market structure as a trader. Market structure is literally the language of the market. So if you don't understand market structure, you are putting yourself up for failure in the market. So in my next video, I'm going to break down and put this in more details using I'm going to explain other systems you're going to use to add to your trading system to analyze and trade profitably. So if you enjoyed this video, please like this video, share this video, and subscribe to my YouTube channel. And in subsequent videos, I'm going to, like I said before, I'm going to break down the system I use in trading as a developing and a growing trader. I've been studying the market for over 3 years, and I'm going to share my experience here on this YouTube channel. So if you're not subscribed, please subscribe because there are more amazing and beautiful lessons you're going to learn on this channel. So guys, I will break down most. I'm going to teach you guys many things on this channel. So if you've not subscribed, please subscribe to this channel, and thank you very much. And if you have any question based on this lesson, you can ask me in the comment section and I will reply you in the comment section. Peace out, and I'll see you in the next video.